Hello and welcome to the John Ark Show. Today's show is called 5 Assets That Can Save Your Life. The economy is going through some historic changes at the moment. Experts and lay people are saying that they have never seen anything like this financially. The question is, how can you prosper and protect your family as events like these continue to unfold? I'm going to reveal 5 asset groups that others are purchasing or creating to protect both themselves, their families, and their companies. Before we begin, I want to encourage you to subscribe, follow, like, and also comment on the show. Also, I want to remind you that the show is sponsored by HollywoodIsCalling.com. It's a company that allows you to purchase live phone calls with celebrities. So whether you want to buy one for yourself or you want to buy one as a gift for somebody you know, we encourage you to do that. HollywoodIsCalling.com is a lot of fun, and I think you'd enjoy it. Before we begin, I want to remind you that I'm not giving anybody financial advice. I'm simply disclosing what other people, really well-informed people across the country, are doing and bringing that to light so you too can benefit from it if you decide to take the same course of action. All across America, people are seeing their investments come under tremendous stress due to recent events. It's causing them to seek out a higher level of financial security and protection. I'm going to disclose 5 asset categories that you and people you know can use to generate more income, generate more financial security, and insulate you from a lot of these recent events. So, asset category number 1 is owning or starting your own business. Um, Owning a business is the single fastest and most significant way to generate a substantial income. If you can't do it on your own, you may wish to purchase a cash flow generating business or a franchise. The benefit of owning a business is that the cash flow generating upside of a business is oftentimes much, much greater than any other asset category that you can contemplate purchasing. Most of the wealthiest people on earth are business owners. Now, a lot of you can't afford to purchase a business. Under those circumstances, what you can try to do is you can approach uh, business owners of struggling companies and offer to partner with them in exchange for offering your services or your labor at a reduced cost. Let's say you're a mechanic and you've always wanted to own uh, a repair shop, but you've never had the resources to do so. What you can do is you can approach a number of struggling auto shops, offer to work for them at a reduced wage in exchange for equity in the business. Now, you may have to approach a couple of hundred repair shops before you find somebody who's A, struggling, and B, willing to take you on as a partner in exchange for equity and your reduced wages. Regardless of what industry you work in, whether you're a lawyer, you're an accountant, whether you're a bookkeeper, a plumber, a landscaper, or a chef, if you want to start a business but you don't have the resources to do so, this is an excellent strategy for connecting with struggling business owners who might be predisposed to taking you on as a partner rather than letting their business file for bankruptcy. It's an option for them and it's an option for you. Now, statistically, this is going to be challenging because, as I said, you may have to approach a lot of business owners before you find somebody that you can agree to terms on. But I want you to remember something. Back in the day, Walt Disney had to approach hundreds of banks before he found one that would loan him the money to start Disneyland out in Florida. Hundreds of banks. So the key is persistence. If you do decide to make a deal with somebody, the important thing to remember is that you have to structure the deal so that you are a partner, but that you don't take ownership responsibility for the current owner's previous debts. If he has to file for bankruptcy, even though the two of you had tried to make a go of it but haven't succeeded, you don't want to be on the hook for all his past debts. You don't want to be involved. What you can do is you can become a shareholder, or there are some other more complicated options that you can consider pursuing. The point is, you don't want to add all his past business debts to your own. should this venture between the two of you fail. Another option to contemplate if you can't afford to start your own business is crowdfunding. Crowdfunding allows you to go online. There are numerous crowdfunding companies, and you pitch the crowdfunding site and its members with your business idea, and you ask them for the capital that you need to get your business started. A lot of these sites don't require you to be absolutely unique in your business idea. It can be fairly ordinary. What people are interested in is earning a return on their money. So keep crowdfunding in mind if you decide to pursue that avenue. Number two is real estate. Real estate is both an enormous source of cash flow, asset appreciation, and tax breaks that come from the real estate. Now, when I say acquiring real estate, I don't mean buying a home to live in. I'm talking about owning a rental property that generates positive cash flow. Whether you want to buy a single family home, duplex, quadplex, multi-unit, that's up to you and your investors, if you've taken investors on board with you. But the most important thing about acquiring real estate is cost mitigation. You want to keep your costs down. You want to negotiate your purchase price as aggressively as you can. The reason for that is real estate deals are made at the time of purchase, not when you sell. Whether or not you turn a profit out of some real estate is determined by how much you paid for it and also how much you spent, if anything, to renovate it. If you're really smart and aggressive about keeping those costs low, then that'll determine how much of a profit you can make going forward. Asset number three is cash and silver. You want to have cash and silver on hand to provide you with liquidity and also to provide you with a bit of a hedge against inflation. Each year the dollar becomes worth a little bit less, and things that you spent money on last year always cost a little bit more the following year. That is because of the erosive quality of ongoing inflation. You can buy a brand new car last year for $40,000, and this year that same car it's $45,000. The reason? Inflation. What does inflation do? It erodes the buying power of your money. That's why silver as an asset can appreciate in value, and it is more resistant to the effects of inflation. And by the way, if things really go sideways, then assets will gain value or hold value much better than cash. So keep that in mind. Cash is important because it provides liquidity. When it comes to cash, you have to be very careful about keeping large quantities of cash at home. You want to keep some cash in the bank, you want to keep some cash in the safety deposit box, but you want to be very cautious about seeing your neighbors having a large safe delivered to your home. They say the old adage that the best way to get robbed or killed is to have your neighbors see a safe delivered to your home. And I believe there's some truth to that. The next asset class are dividend yielding blue chip stocks. Some people are investing in dividend yielding blue chip stocks because they believe they can make money on the way down, and they believe they can make money when it goes back up again. That's a matter of timing and skill and expertise. If you do decide to incorporate that into your portfolio, just be mindful of all the threats posed by investing in the market. We see what recent events have done to the market, and who knows what the future holds. So be very mindful of all those downsides. Number five is a new one. Number five is social media presence as an asset category. I believe that establishing and growing your social media presence on various platforms will become a very important asset class going forward for a lot of people, not just millennials, but for a lot of people. There are those that believe that the best products and services of the past didn't succeed because they were the best products and services of the past. They succeeded because they got the most attention. Money follows attention. The Betamax video recorder was the first to market, and it was technically superior to the VHS video recorder. but it wasn't the winner. What happened was the VHS Video Recording Alliance, they signed deals with the major motion picture studios, and they got all those movies on VHS tapes, and that drew so much attention and so much publicity that that it allowed VHS to leap forward and dominate the Betamax industry. Um, as a result, it caused them to grab a huge market share, and this was a problem that Betamax eventually never recovered from. I believe that today and going forward, that the amount of money an individual makes, the amount of opportunities they realize, um, the caliber of their social network, of the people they're able to form contacts with, will be determined by the quality of somebody's social media presence. We now live in an era where how connected you are, how much attention you can generate online or in person, and in the real world will determine um, the extent to which you are taken seriously in the professional world and in the business world and even in the social world. The most important part of any asset you build or purchase will be its ability to generate cash flow, hopefully recession resistant cash flow. That means acquiring or investing in cash flow assets that the average or poor person really needs or wants. I would stay away from anything designed to appeal to upscale, premium, or luxury markets. A lot of these markets are continuing to bleed to death. Almost nobody wakes up during a recession and needs to buy a $5,000 suit or a $2,000 pair of shoes. You know what they say about real estate? You never want to be the most expensive home on the block. That home is usually the most difficult to sell and the one that has to lower their price most aggressively. You want to insulate yourself with cash flow generating assets that'll keep feeding your family and protect you going forward. You want to grow your social media presence to a level that is high enough to cause other serious business minded people to notice you. That's really important. And take you seriously enough to want to do business with you, to want to hire you, to want to connect with you. So just to summarize, businesses, real estate, cash, blue chip, dividend yielding stocks, and a significant social media presence, those are the assets that I think will insulate you from recessionary forces or events or black swan events that are very disruptive, that are temporarily very disruptive. Thank you for watching, and we'll see you soon.